Okay, good evening. So welcome to today's session over here. So for today's session, we'll be covering on a educational topic, and the topic over here will be on harmonic patterns. And if some of you have probably explored or come across this before, you may find that this particular pattern is actually very effective. This strategy is very effective, especially when the market is in a range-bound environment. So we know, right, market tends to be in trend, and if not, then it tends to be in a range-bound environment. So essentially what you might want to kind of like equip yourself with is to also have a strategy to cater when the market is trending, so you can actually be effective in capitalizing on that. And then you have another set of strategy which you can then use when the market starts to go into a range, right? So harmonic pattern is effective when the market is in the range. So you can use this, of course, in currency market. You can use it in your index trading. You can use it for CFD. You can, of course, also use it in terms of crypto market or commodities market, right? Because all markets eventually either trend or range. Okay, so that's what we're going to talk about today. Okay, so very quickly over here, for those of you who join in maybe the first time in one of my sessions over here. So my name is Kar Yong. Just a quick background about myself. I started trading back in 2012. That's where I got exposed into the world of finance, right? Mainly in terms of FX. And then throughout my years, I come across many different strategies. I've tried out many different of those strategies as well. And of course, harmonic pattern is one of them. Okay, and that's where I kind of figured that it's actually a very best, I would say, a very effective strategy for a range bound. Then I turned full-time in 2015, and since then I've been full-time and actively doing trading, investing, and of course on the side. Enjoy really sharing what I've learned, my personal experience with you guys. Okay, so over here, just quick one, I do have some social medias account that I'm active on, like Facebook and Instagram. Just want to very quickly highlight over here, if you're not very familiar with me as a person. This is important because nowadays there's a lot of fake accounts, right? I'm not sure if you guys have encountered any before, but the idea is those people would set up accounts out there using my name or even my profile pic, quite similar to that, and then they'll start to reach out to people and ask people to transfer money to them, or they have some kind of like whatever investment or products that they're selling. Okay, so just want to let you know, if you're also active on like Facebook, Instagram, on social media, and you'd like to follow me, just make sure the URL is my full name. Okay, and I only have one Instagram and one Facebook. Okay, so be aware, okay, of fake accounts. Anyone that can DM you and reach out to you asking you, how your trading is, asking you to transfer money to them or buy some things from them through messaging. Just be very, very careful, right? Always double check, make sure it is, make sure you know what you're doing, okay, before you actually transfer any money or funds to any of these accounts, right? But for me, I never do that. Okay, so if you actually see my face somehow looking like my name, reaching out to you, then that's not me. Okay, so with all that said, what are some of the things that we want to cover in today's presentation? Number one, of course, to introduce to you what is harmonic patterns, especially if, let's say, you have heard of it but never really encountered it, okay, or maybe you never have heard of it before. Then today will be a very good introductory kind of sharing to understand what harmonic pattern is. We'll talk about how you can identify the patterns, right? So in the world of harmonic, there are many different patterns, right? We have like Gartley, Bat, Cipher, Shark, Butterfly, Crab, and then the recent years they've extended a little bit. But just what I've mentioned is in total 6 patterns, right? So each pattern will have its own very specific rules and criteria that you need to meet before we can say that, oh, we are likely going to see a certain set of pattern. So today's presentation, obviously with time limitation, we won't be able to cover all the patterns inside the world of harmonics. Okay. But what we can do is, likely I'm going to cover 2 patterns over here, namely the Gartley pattern and Bat pattern. And then what we'll do, of course, is to go through the slides over here to give you an understanding of the conditions, the rule base, and then after that we'll go over to a live market environment to kind of show you some practical examples of applying this. Okay. So the idea of harmonic trading or harmonic pattern, one of the nicest thing of all is number one, is very objective. Okay, meaning that there is no second guessing. Okay, because it's very rule based oriented. It's not like you need to look at the candlestick, then how do you define a pin bar? Every trader would define a pin bar slightly differently, right? But the idea of harmonic pattern is quite straightforward, right? You just need to be very familiar with the rules, with the conditions, and then you'll be able to apply it. Okay. And the thing here is, of course, when we're looking at harmonic pattern, when we're using it as a form of analysis, naturally, I call it a complete trading strategy as well, because it will allow you to have clear entry, stop loss, and take profits, right? So I would say it's a strategy that it's not easy at the start, but it's actually a strategy that is very effective for traders who really want to focus on rule-based approach towards trading, right? Versus maybe discretionary. Some traders don't like it. Okay, so that's the part where harmonic pattern stands out. Okay, so let's start with understanding a little bit about what harmonic pattern first, right? So what they are. So harmonic patterns essentially, they need 5 points to complete. Okay, and we as traders, we trade these patterns only when they are completed. Okay, so they need 5 points, right? And each pattern itself will have a very specific guidelines. Like when we look at Gartley would have Gartley rules. If you look at Bat pattern has its rules, and then etc. etc. Okay, and of course today, if you want to use harmonic patterns, you need to be quite comfortable with Fibonacci ratios. Okay, because all the rules that I talk about essentially are your Fibonacci ratios, right? Depending on how price pulls back towards which Fibonacci ratios, that's where it's going to have an impact on like which different patterns is likely going to develop into. Right? So we'll definitely look into the details of all this as we progress for today's session. So over here, quick introduction, 2 categories of harmonic pattern. Just I named a couple, right? So there are generally 2. One is what I call a retracement pattern. Okay, the idea of a retracement pattern is that the completion will be within a range. Okay, so patterns such as Gartley, Bat, Shark, and Cipher. Later I'll show you some examples of how they look like. They're basically the retracement pattern, right? As I mentioned, the completion of the pattern is essentially within the range. And then we have the other category, which I call it the extension patterns. Now the extension pattern here includes like butterfly and crab. The extension pattern, the completion zone is going to be beyond the range. Okay, so it's going to be extended out, right? So that's why the name extension pattern. So very quickly, let's take a look at some examples, right? So this one here is an example of a bat pattern. Okay, just to very quickly give you a visual look of it, and then we'll go into the details of how to identify some of this, right? So this is a bat pattern, right? So it can look like that. Okay, of course, if you flip it, you mirror it, it becomes a bearish opportunity, right? So this is a bullish completion bat, and then if you flip it, it becomes a bearish bat. Now this is what we call this is in fact a butterfly pattern, right? So why is it a butterfly pattern? You can see that the D point, which is the completion of this pattern, basically extends out of the range, right? So if I go back to the bat, you realize that the completion is within the range, right? So that's essentially what I mean. Okay, so this is a retracement pattern, this is an extension pattern. Okay, this one over here, this example is a cipher pattern, right? So you can see it's also a retracement pattern because the completion is basically within the range. Right? So just want to very quickly give you some visual perspective of some of these patterns, right? But of course, today's focus will be very much on Gartley as well as Bat. Okay, so now with a quick introduction, about all this, the next step obviously is to learn how to identify them, right? And then once you're able to identify them, then you will be putting in this strategy, which means your entry, your stops, your targets, and the whole process is just like trading. Okay, so how to identify the pattern? Okay, first off over here, what we want to do is we want to first look out for patterns when the market is in the range, right? So obviously this depends again on the time frame you're looking, okay? Because if you're looking at 15 minute can be in a range, but let's say another trader is looking at 1 hour or 4 hour, and that particular time frame the market may be in a trend, then it's different. Okay, so the idea is whatever time frame you're trading on, you want to first identify that the market is in fact in a range bound environment. Then you want to put in the harmonic pattern kind of analysis, because if the market is in a trending environment, you won't be able to identify any pattern. Okay, so that's the whole idea of it. Okay, when you want to use harmonic patterns, you're likely going to find them only when the market is in a range. Okay, then what you want to do next is, before you even jump into measuring it with your fibs, looking at some of the criteria and sort of, you want to first visually look at the chart and see if you can find any form of a W and M formation that is developing. Now, you don't want the W and M to have completely developed, because that means that the pattern may have completed and you may have missed out on the opportunity. But what you want to look out for is a W and an M formation that is still developing, right? Which means the last leg of your W or the last leg of M is not done yet, but it's already giving you the shape of a W and M, right? That's where you get a very high probability you have a harmonic pattern. Okay, and then the next step is where we start to utilize the Fib ratios. Okay, so you can see it's very, very specific in the step-by-step kind of process, right? You first identify a range bound, and then what you do next is you look up for W and M, and once you have some sort of a W and M forming, you jump into Fibs to help you identify a specific one. Okay, so let's go through one visual example, right? So if you take a look at this, this is basically an hourly chart. Okay, and what I did is I input in a indicator if you're using a trading view to analyze your charts. That indicator is called pivots high and low. Basically, if you're using on, let's say, MT4, MT5, that indicator is already inbuilt in your platform anyway, but it's not called pivots, right? If you're looking at MT4, MT5, it's called fractal. Okay, on trading view, the indicator is called pivots HL, high low. Okay, so what you see over here, of course, is some markup of prices, right? So the idea of a pivot on trading view or fractal indicator on MT4, MT5 is to help us mark out some obvious turning points, right? So you can see like this low here is very obviously turning. This high is obvious, the low and highs are basically obvious turning points. Now, you do not need this indicator in your analysis, but it does help a little bit in terms of a visual perspective. Okay. So you look at this is basically in a range bound, right? The market is not going anywhere in particular. We have the high, we have the low, and then the market is basically range. Okay, so we have the first criteria done. The second criteria is to start looking out for M or W, right? And that's where all this little indicator, this turning point helps, right? Because that's where we're going to start to connect the dot, right? So from this low to this high to this low to this high, and now it's coming down, right? So in that case, you can see over here, we're starting to build in a potential M formation. Okay, it may not have completed, or it may be very, very near in completion, but you can see this is the M. Okay, and in terms of harmonic pattern, we use some form of a label to identify each point. Okay, so the starting point here is your X, and then you have your A point, B point, C point, and D point. D point essentially is your completion point or your completion zone. Okay, so harmonic pattern builds up with 5 points: X, A, B, C, D. D being the completion, and that's where we expect the pattern to complete, and we'll then look for an entry. Okay, now an N formation pattern in harmonic is a buy setup, right? So we're looking at after the completion of the pattern. In this case here, we'll look to buy it to the upside. If it's a W formation, then we'll be looking at the opposite. We'll be looking at the sell trade. All right. So once you're able to identify a range bound, you're identifying the M and W formation, then the next step is essentially just understanding fibs and then pulling fibs to identify which specific pattern we are looking at. Okay. So there are two types of Fib ratios. One is called the retracement, and the other one is called the extension. Now for retracement patterns, specifically Gartley as well as Bat, we'll be focusing more on the retracement ratios, right? So I just want to throw it out there so that you know in terms of Fibonacci's, we have two types, retracement and extension. But today we'll focus very much on the retracement ratios itself. Alright, so how to use these ratios? Again, we first start off by identifying the starting point. Okay, so the starting point of an harmonic pattern is basically your X point. Okay, once you are able to kind of see the M and W formation, and then you have clearly identified your X, A, B, C, and looking out for D. When you use the fibs, right, your starting point is always the X. Okay, and then what we do is we pull it, okay, in the direction of the XA leg. Okay, so basically X point, A point, you connect the dot, that's what we call the XA leg. Okay, so we pull the fibs to connect from X point to A point, and we basically measure the fibs, right? And again, you don't need to go and manually calculate because the tool called Fibonacci ratios will automatically calculate, you know, all the retracement level for you, 382, 50, 618, 786, 886, etc. Okay, so when we do this, we are essentially measuring the retracement for point B. Okay, if you pull from X to A, you're measuring point B. Okay, so give you some visual perspective on this as well, right? So coming back to this example here, right? So you can see here, this is X, this is A point, B, C, and D forming back at the bottom, right? So what we do over here is we want to understand, you know, how deep is this B point, right? So what we do is we take from X to A, we pull the fibs, right? Retracement in the direction of X to A, right? So we take from low, we pull it to the top, and then we start to observe, okay, 50 and 618 here. So B point kind of came and touched the 50%. Okay, but in this case, you realize that it did not touch the 618. Now this is very crucial because it's very specific in its rule. Okay, if it touched the 618, then the retracement will be considered as 618. Okay, so we always look at it from the perspective of during that retracement, did price touch that particular retracement level? So in this case, it touched the 50, it crosses the 50, but it did not touch 618, it's still considered 50. Yeah, so you can follow me there. So what we would say, or what we could communicate the idea is, we'll say that B retracement is 50%. Alright, so that's how we communicate the idea of it. Now then after that, you know, if we want to measure C point, what we do is we take the fibs, so we can erase the previous one, right? So what we do is, we want to measure C point, we take the fib, we pull from A to B. Okay, so it's kind of repetitive, but you get the idea of it. So you take from A to pull to B, and then you realize, hey, in this case here, price for C point touches the 786, but it did not touch the 886. Okay, so what this means is that C point retracement is 78.6. Okay, you can follow the idea, right? And then lastly, if you want to measure D point, in a while I'll give you more specific in the rules, but right now it's just giving you an understanding of how we pull the fibs. Okay. Now if you want to identify D point over here, okay, what we usually do is we take from X to A again. Okay, so we take back the XA leg, and in this example, D point completes will be around 886, right? Again, why is that the case? We'll go into the details because of this specific pattern. So what this means is that price is currently here. We're expecting price to come down a little bit more, complete the entire pattern at 886, and then from there, we expect it to bounce up. Okay, so then naturally, 886 becomes our potential buy setup. So, right? So this is the idea of it, right? So that's how we pull the fibs, and that's how the steps, right? Just very quickly recap. First one, identify range bound market. Second, look out for M and W formation. Third, pull the fibs to start looking out for specific patterns. Right? So here are the rules, right? So today we're going to go through two patterns, mainly the Gartley and the Bat. Okay, so let's look at Gartley pattern rules first. Okay, so first we look at point B retracement. Okay, and for Gartley pattern, point B needs to retrace at least 61.8 of the XA leg, but cannot touch the 786. Okay, so it's actually a very specific rule. It needs to touch 618, but it cannot touch 786. Now, once point B has been identified, then you look up and measure for point C. So point C basically is a range anywhere between 382 and 886 of AB. It's fine. Okay. And then once you are able to check off point 1 and point 2 over here, the third point is basically the completion, which is point D. Okay, and point D here is basically the 786 retracement of our XA leg. Okay. Now I'll show you some visual explanation so you understand it. So over here, for our chart, okay, so same thing, we identify a range, right? The market is not going anywhere. We kind of have a potential W formation developing. Not completed, potentially developing, and that's what we want, right? We want to identify the opportunity. So over here, you can see this is our X, A, B, C, D may be forming, right? So that's where we want to look out and be prepared. So once we identify this, right, the next thing is to start to pull in some fibs. Okay, so what we do is we take from X to A, we pull the Fibonacci down, okay, because that's the direction, pull from X to A. And what we observe is that B point over here retraces and touches the 618, but not the 786, right? So that's crucial. So that's the first criteria for Gartley, right? B point must come at least 618. So that's fulfilled, right? Point B retrace back to 618. Then the next thing to look at is point C. Okay, and point C basically has to be between 382 and 886. And in this case here, we came down, touched the 50. It's great. Okay, because we have at least 382 to 886, right? So 50 means it's within the zone. Okay, so point C retrace back to 50. That's valid. So once that's done, all we need to then do now is to measure where would point D likely completes, right? So for a Gartley pattern, point D is at the 786 of our X to A leg. Okay, so you take back the Fibonacci, pull from X to A. 786 is where D point is likely going to complete. Okay, so most of the time when we're looking at harmonic pattern, we like to draw in some kind of visual triangles, right? So it's kind of looks something like that, just for visual perspective. So the idea is we're expecting price to come back up to 786 and then we'll look to sell it. Okay, so this is what we call a bearish pattern, right? Because once the price completes at D, we look to sell. So it's a bearish pattern. Okay, so example, it looks like that, perfect, right? So the pattern completes, rejected off 786, come down. Very nice little trade. Okay, so that's Gartley. Okay, in a while we'll jump into the markets and scan through and share with you the whole application process. We'll go through bat pattern here as well. Okay, so bat pattern, the first two steps is the same, right? Identify a range bound, look out for M and W. The only thing different over here is the specific conditions and the criteria. Okay. So bat pattern, point B here, you can see, right, it needs to retrace at least 382, but it cannot touch the 618. The reason is very simple, right? Because if point B touches 618, we'll have to look at Gartley. But if it retraces between 382 and net did not touch 618, we'll then be looking at a potential bat pattern, right? So that little detail differentiate these two patterns. Then point C is basically the same. Point C retraces between 382 and 886 of AB. So within that range, it's fine. And point D is different because point D for a bat pattern completes at the 886 of XA leg. Okay, so Gartley pattern completes at 786, but the bat pattern completes at 886. That's the difference between that two. So let's look at a visual explanation of this, right? So same thing here, range bound market, okay, starting to form a little bit of a M-shaped formation as we can see. Okay, so point B, if you want to measure, we pull from X to A. Point B came back to 50, did not touch the 618. It fulfills our first condition of a bat. Then we look at point C. Okay, so we take fibs from point A, pull it to point B. Point C, retrace 786. It fulfills condition. The third one over here is essentially looking at point D. So if this is a bat pattern, Point D completes at the XA leg of 886, right? So over here. So again, if you're gonna draw in the triangles, basically it looks something like that, right? So you have your X, A, B, C, D. Now, what we're looking at, this is a bullish pattern, which means if price comes back down, completes the pattern D, then we're looking at a buy. Okay, so this is what happened next. Okay, very nice little tap and then bounce. Okay, these are what we call ideal patterns, right? Very nice little trade. Okay, so of course, today I'm showing you one bearish Gartley and then one bullish bat here. But you can flip it, you mirror it. It's basically the same thing, right? The conditions are all the same. It's just that one is M, one is W. Okay. So now with the ability to kind of like understand some of these steps and processes, right? How do we put in a strategy into it, right? Now that you know, okay, where is likely gonna complete, gonna see some reaction. You probably know like this is the entry point, right? But how are we gonna look for targets and stops, right? So that's where the strategy comes in. Okay, again, it's a rule-based technique, so everything is step by step. Good. So we have a checklist, right? So the checklist over here is first, the market must be in a range-bound environment. I'm kind of repeating this quite a lot of times, right? Second, we start to identify, some kind of M and W formation that's developing. And then we use Fibs to identify a specific pattern, right? The fourth is basically to set our entry, SL, and TP. That's all. Okay. So you realize that when you're using Harmonic pattern to analyze as well as trade the market, it's kind of built in entirely, right? Because when you are looking out for the pattern, you're analyzing the pattern, you're also looking out for your entry, stops, and targets already. Okay. So how do we put our entry, stops, and target? Okay, that's the execution rules over here. Our entry will be at point D, right? Which wait for the pattern to complete. That's where you're going to get in. Our stop loss will be placed beyond point X. Okay, so if you're buying, then of course your stop loss is below X. If you're selling, your stop loss is above X. Okay, so that's why the word beyond X. And then your target 1 can be set at the trade 2 of an AD leg. Right, so you pull Fibs from A to D point. And then you look at trade 2 as your target 1. Okay. Target 2 over here can be set at the 618, okay, of your AD. And of course, if you want to go for even extended like target 3, you can of course put it at the previous top or bottom, right? So I think targets are not so strict because it's up to an individual how much profit they want to aim for. But I think the entry and the stops are a little bit more specific, okay, in terms of Harmonic. Good. So let's take a look at some examples, right? So this one here is a Gartley pattern. You can see the entry will be at 786. The stop loss will be above the previous point X. Okay, so that becomes your potential risk. And then you basically have a target over here. You pull from A to D, right? So how do you get 382 and 618? Pull from point A to point D. Okay, so your AD leg 382 is TP1, 618 is TP2. Right, you can go for extended target, like you can look for TP3 at the bottom there. Okay, but this again, as I mentioned, targets entirely up to individual. Okay, so this one here play out very well, right? You can see hit our entry, did not even test the stops, straight up immediately drop, go through TP1, TP2, and even TP3 if you look for it. Okay, so that's the example. And then we have the bat just now, right? So bat becomes entry at 886, stops is at below X. Okay, and then once it tags, you can see what we do for TP1, TP2, we pull from A to D. Okay, AD leg, 382 target 1618 TP2, and of course you can go for extended targets at the top. And of course this one here just play out quite nicely, right? It tags TP1 and then in a short while it goes to your TP2. Okay, now you can of course have some form of management as well, right? In a way where maybe after it hits your target 1, you shift stops to break even, and then you ride for target 2. If you go for 3, then after target 2 has been hit, you trail your stops to maybe target 1, etc. Right? So again, that kind of details, I leave it up to individual traders to decide on how they want to manage those trades. Okay, but this is basically the gist of it. Okay, so today we kind of went through 2 primary patterns, right? The Gartley as well as the Bat. Okay. So with that said, let's jump into the charts over here. Kind of walk you through some practical examples, and then I'll see, we'll walk through maybe 2 examples to scan through and find 2 examples of it, and then I'll open up for Q&A and see if you guys have any questions. Okay. Now I may not look at a 4-hour chart simply because some of these markets here are obviously in a trend, okay, and therefore you won't be able to identify anything, right? But if I jump into maybe charts like this one, right, like Euro franc, okay, then we can see, okay, from here on it's a little bit of a range bound, right? Okay, so we can work on some higher time frames, for example, and then we'll go into some shorter time frames as an example, right? But the proper way to do it is not to keep jumping around different time frame, but stick to a trading time frame that you want. Okay, if that particular time frame is in a trend, then you don't use harmonic pattern. You don't try and force it in, right? The idea is always identify what the market is doing and then use a proper strategy to kind of leverage onto that, capitalize onto that. Okay, so very quickly, I'll walk through this example here first on the 4-hour chart. Okay, now what we can see is, right, the market is in range, and maybe you may need to take a little bit practice, but some of you who are faster may be able to see a little bit of a W formation, potentially playing out, right? Of course, this may not be completed, but you can see from this peak to this low, it bounced up a little bit, it came down again, forms another low, so you can't get a W formation forming. That's what we want. Okay, so of course, what I can do is I can put in some label here so that we all can visually understand what are some of the points that we're looking at. But of course, if you are very familiar with the pattern, you don't need to put all this in. Okay, I mean, if you are just analyzing and trading yourself, you don't really need to put all this in. But you can see, right, this is my X point, my A point, my B, my C, and then of course my D is potentially forming. But I'll need to then measure, where is it likely to complete. So the first step in terms of the rules is, after I went through all this, the first step is always to take fibs and pull it from X to A, right? So we'll measure the XA leg. Okay. So with this here, of course, trading view, you just can play around with the settings. So I take out my trade 250%, you can see B leg, okay, B leg, whoops, okay, B leg here, okay, basically pull back and came back to 382, but did not touch 50. So it's fine, right? Because that pattern says that B point must minimum touch 382 and cannot touch 618. So in this case, okay, my point B is fulfilled, right? It's okay. Conditions are acceptable. Then I need to also identify point C, right? So if I take from A to B, point C here cannot touch 886. Okay. So in this case, okay, it touched, so maybe no go. Okay, because C leg must be between this range and it cannot touch the 886. So in this case, it touched. So this is not a valid pattern anymore, right? We may have a W forming, but this one here is not fulfilled. So we skip. Right? So this is probably not a good example to talk about actual pattern, but it's a good example to show you that when the conditions don't fulfill, you move on. Okay. Yeah, some patterns are okay. This one here is in a, yeah, I don't think this will fulfill. Okay. Good. Okay, this one here will be, okay, so silver, okay, 4-hour chart. Okay, so again, on the 4-hour scale, in the near term, we are seeing kind of a range bar environment, right? So that's where the pattern starts to appear. So same thing here, we're going to start off with a W or M formation, right? So in this case here, you can see a little bit of a M shape potentially forming, right? So we kind of have our X, we have our A there, okay, we have our B leg here, okay, we have our C leg here, and of course D is potentially forming. Okay, so same process, we have identified a potential M, we have our X, A, B, C, and then D somewhere down there. We take fibs, pull it from X to A, Okay, and what we want to look out for is where did it retrace to? It came to 618. Did it touch 786? No. So it fulfills a Gartley pattern rule, right? It came to 618 but never touched 786. So that's a Gartley potential forming. Then of course we also need to measure C leg, right? So we take from A, pull it to B. So we can see, okay, point C came to 618 but never touched 786. Fulfilled. Great. Okay. So now what we have is a Gartley pattern forming. Okay, so we know if it's a Gartley, D is going to be the completion at 786 of our X to A leg. Okay. So that's where your D point is likely going to complete, right? So if I'm going to put in like some, again, triangle illustration, that's how it looks like. Okay. Now, the idea is, of course, whether this, how long it's going to take to complete, we won't know for sure, right? But the idea of this is if the market keeps falling and it touches this area, which is around $23, we can look to buy. Okay, that's where we're interested in. So if we start to put in the strategy over here, okay, what will be our entry? 786. Where will be our stop? Below X. Okay, so what you can do now is you look up buy, stop below the X point. Okay, and then your target, depending again TP1, TP2, or how far you want to go. But the kind of rule here is you take your fib to look for target. You take your fibs, you pull from A to your completion point D, and the two levels we look at is 382 and 618. Okay, so this becomes our TP1, and we have our TP2 here. Okay, so if you want to go for more, of course, you can then have like TP3 at the top, okay, of the price. So that's the kind of like process, okay, that we use to identify a range bound environment. We start looking out for harmonic patterns to develop, and then we have a rule-based entry, stops, and target. Okay. So this is actually done on silver chart on the 4-hour time frame, right? So I just want to go down to smaller time frames to just show you that it can be done on the smaller scale, right? So maybe we'll consider like 15-minute, right? So we'll scan through the charts to see if we have anything on the 15. Okay. Now sometimes you see, well, this is probably in the range, but we don't really get a W or an M. You can skip it, right? Again, it takes some practice, but as the more you practice, the easier it is for you to identify. Okay. Yeah, so there's nothing much there that's happening. Good. Yeah. Don't think there's anything there as well. I mean, the yen pairs right now on the 15-minute is in the trend, right? So there's no harmonic pattern in there, right? Let's see. Yeah, so some of this market are moving today, so there's unlikely any pattern. Okay. Yeah. So far, 15-minute doesn't seem to have anything meaningful. Okay. Let me just go through. Yeah, maybe this, right? So Cat Frank. Okay. So if you look at Cat Frank on a 15-minute, right? So we are essentially looking at a range over here, right? So after this push, the market is in a range bound. And of course, what we can also look out for is a potential M formation maybe developing, right? So of course, I'll still put that process in just to get yourself familiar with all this, right? So we have X, A, then we have B leg here, okay, and then we have our C leg here. Oops. Okay, and of course D will be somewhere there, right? Okay, so the idea again, take fibs, measure from X to A. What we have is B here came down to 618, right? It never really touched that 786 at all, so potentially Gartley pattern is forming. Then what we also do is to measure C leg, right? So we take from A to B. You need to check if it touches the 886. In this case, it's borderline. Again, depending on how strict you are, you you can consider it still valid, or you can take it as it touched, so you don't want to look at it. But for example purposes, we'll just consider it it's valid, just for example purposes, right? So if that's valid, then it becomes a Gartley. So D point here is going to complete at 786, right? So we're going to take from X to A. 786 is the completion zone, right? And again, if I just draw in that pattern illustration, that's how it looks like, right? So then, very straightforward, everything becomes row base. You look for a buy, it stops at the bottom. Your target over here, you take from from A, pull it to D, target 1, trade 2, target 2, 618. That's how you set it up. Can follow me, right? So very, very straightforward once you're very familiar with it. Everything is rule base. Okay, so that's how you set it up. Okay, but of course you want to identify like range, right? Again, not all the markets are in the range bound right now on the 15-minute. I mean, like the market is moving today, right? Especially on the majors and the yen. So on the shorter time frame, we're in a trend. Okay. Again, you don't want to play around with time frame too much. As I mentioned, the steps should be you decide what time frame you want to stick to. Go through that time frame. If there's nothing, there's nothing. If that time frame is trending, obviously you don't use a harmonic pattern strategy. But if that particular time frame is in the range, this is effective. Alright, good. Maybe I'll just very quickly scan through one more time on the 1 hour chart to see if we can get anything to talk about. Really nothing much, yeah. Okay. Okay, understand that because today we only went through like 2 patterns, right? Like this here is actually also a harmonic pattern potentially developing, but we did not went through this, so you know, that's where we skip it. Okay, but you can see, right, what's happening here is essentially this is a range bound, right? And that's where the pattern starts to appear. But because we didn't talk about this pattern, I'll just skip it. Okay. Yeah, maybe pound cat may have something. Okay, just very quickly look at it. Yeah, right. So you can see, right, if you're fast and you're very familiar with this, all I need is to just visually look at something like that. Okay, and I immediately can pull in Fips and I look at this. Okay, 50%. Okay, and of course this pullback here with a rough estimation of this leg is 50% as well. So you do not need to always pull it once you're familiar with it, right? So by looking at that, then, you know, we have something like this, then this would be a bad pattern formation. Okay, so it can be actually quite fast once you're familiar with, you know, the rules, the setups and things like that. And then what happens over here, of course, this will be a buy, this is your stops. You know, and then you take your Fib here to kind of give you some reference for targets 1 and 2. Alright, so again, hourly, same process, right? So I just want to give you like different time frames, different examples. Cool.